You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again to break down the action-packed world of futures options. Yes, it is time for TWIFO This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are binging these days. First off, if you're just listening to TWIFO, A, we love you. B, you're missing out on a whole bunch of other content on the network. So make sure wherever you're getting this, that you upgrade to the full Options Insider Radio network feed. And then, of course, if you want even more in your life, you want exclusive shows like Pro Q&As, as well as Options Oddities every Friday. You want access to our awesome giveaways, which another one coming up very soon for the month of March here. So you want to get in on that one before the drawing is held, as well as, of course, you want to join this show and every other show that we do live here. Instantaneously engage with all of our hosts on the network, get bumped to the top of the list for all of your questions and all that fun stuff. theoptionsinsider.com/secret club. And of course, we do love to hear from you. So if you like what you hear, keep rating and reviewing on the platform side, on the podcast side, and of course, keep sending in those questions as well. Just, of course, if you want to get them in quickly and get them answered quickly, Secret Club is the best way to do that. Let's see who we're hearing from on the old show today. I am pleased to be joined in the CME and FTSE Russell hot seat by our old friend, frequent offender, making his return trip to the hot seat, Mr. Dan Gramza, the president over there at Gramza Capital Management and DMG Advisors. Dan, welcome back to the hot seat, sir. It has been too long.
Well, it's great to be with you, Mark. A lot going on. I'm really excited about exploring some of these markets today.
Yeah, a lot to unpack. So let's get to it, sir. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down what the heck is lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. You could probably guess a couple of them, I'd imagine, but you never know what's going to make it onto the list. That's why you got to tune in every week. And Mr. Dan, you know what I'm going to ask you right now? Where should we begin our journey this week, sir? To the light side or to the dark side?
Well, it's always such a difficult choice, but what do you say we start to the light side?
Ever the optimist, sir, that you are. All right, let's do it. Let's kick it off here. To the upside we go, listeners. And looking at the list, by the way, you could find this chart for yourselves if you follow us over there at Options on Twitter, or if you follow CME. They do tweet it out right before showtime. We tend to retweet it as well, so you can see it there. If you did so, you would see, in terms of raw numbers, it's roughly evenly split, 50-50 upside to the dark side, even though to the dark side we have a little bit more extensive movement here when we get to the bottom part of there. But we'll get there in a second. First, to the upside we go. Number 5, it's our old friend Oats, up 2.1%. Kind of a frequent offender on the Movers and Shakers. It's a shame we can't really parse them on the show. I think they do a whopping like 3 contracts a week, something along those lines. So not exactly a large options player out there. Number 4, we have our old friend Class 3 Milk. You know, dairy's kind of been coming on the radar a little bit, up 5.08% this week. Will we get to this week? Who knows? Interesting. You know, it's more of an options player than it ever was. It's still obviously no Eurodollars or S&P E-mini, but it's doing more paper, so potentially that's a place we could go. Number 3, our old friend Bitcoin, making some moves this week, up 5.85%. It was number 4 in the same direction last week, up a similar 5.48% last week. So a good couple of weeks for the old BTC. Also, if you listened to last week's show, you know it's a good week for CME in the crypto front because they launched the new micro options products out there on ETH and Bitcoin. I know products a lot of you have been waiting for. So it should be pretty interesting there. I always say there's kind of 3 names you could rattle off every week, and the chances are at least a couple of them will be somewhere on our Movers and Shakers. They're usually Bitcoin, nat gas, and probably lumber. And number 2 is another one of those offenders. It is nat gas, listeners, up 6.17% this week. It was slightly outside of our top 5 last week, but it shows you how aggressive our top 5 was last week because they were up 3.35%, and it still wasn't only good for number 8. It actually would have been number 5 this week on that level. And then number 1 to the upside this week is the old Eurodollars, getting out to the rates. Now to the dark side we go, listeners. As I mentioned, a little bit more extensive movement to the dark side this week. Number 5, we got a lot of energy on the dark side this week, listeners. Number 5 is RBOB, off 4.85%. It was number 5 in the other direction, so it kind of flipped places this week. It was up 4.96% last week, so kind of a bit of a yin and yang out there in RBOB and indeed in a lot of the energy. Number 4, our old friend WTI. You may have heard of it, off 8.14%. It was number 3 in the other direction last week, up at 9.25%. Number 3, it's pretty much just a straight list of last week's offenders in the other direction. Number 3, Brent, off 9.5%. It was number 2 in the other direction last week, up 11.45%. Number 2 is heating oil, off 11.14%. It was number 1 in the other direction last week, up 18.66%. And number 1 managing to steal the dark side top spot this week, it's palladium, finally giving back some of that aggressive upside, off 13.19%. So, Mr. Dan, I think it's fair to say a lot of people are obsessed with the energy complex these days. So I think we have to start our journey there.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the energy segment of the show. You guys know how to play along no matter when you're listening, live, after the fact, 3 years from now. You can still run these reports over there, cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those will get you to This Week in Futures Options reports. Then just scroll on down in that asset class selector And we're going to stop in energy. It's the third one down, then pop over to crude oil under product family, and under product, go to WTI, and that will get you to where we're going to start our journey. But before we get into all that fun, Dan, it's been a while since you've joined us. It's been since actually late January 20th of this year. So it's been, a few months. A few things have happened since the last time we talked with you, Dan. A lot of them focused in the energy sector. So let's start there. Catch us up on these last couple of months. What's been going through your mind as you've seen this, of course, the big invasion in Ukraine and its subsequent impacts on the energy sector, sir?
Well, I guess when I think about the complex in general, first there's, 100 countries produce crude oil. And about 5 countries produce about 50% of the world's total crude oil production. United States, which is about 15%, Russia, around 13%, Saudi Arabia, around 12%, Iraq and Canada. Iraq's about 6%, Canada's 5%. And there's discussions, people say, well, let's get this deal done with Iran, because that'll be a lot of crude oil. They may be about 1 million barrels a day. I think their max is about 2. But if we look at this breakdown, there's only 3 countries that can produce more than 9 million barrels a day. And that is Saudi Arabia, Russia, and the United States. United States, right before the pandemic, we were approaching 13 million barrels per day. And there's a good chance that we could produce more than that if we really have everything open in our country in terms of production. Saudi Arabia is talking about adding more production so they could get closer to that 13 million, and they're planning on investing billions of dollars to be able to do that. The challenge there, though, is the timeliness of it. What is our current situation? What needs to be done? We know that Europe is really dependent upon, especially nat gas from Russia. India imports about 80% of its oil from Russia. Also, they get a lot of metals from Russia as well. India is the 5th largest automobile industry in the world. So their relationship economically tied to Russia is why you don't see them pushing too back on Russia because of that economic tie. We're also seeing the ramifications in transportation. We see the huge, giant oil tankers around the world. Those rates have increased 400%. There's hundreds of tankers and bulk carriers out there, and they're diverted away from the Black Sea. Nobody wants to put a tanker in there that you may not be able to get out. And right now, there's tankers full of oil that have been stranded at ports and at sea, unable to unload their cargoes. Windward, a company that follows this, they estimate there's about 87 million barrels of Russian oil worth about $10 billion floating out there in the ocean. So there's a lot going on in that regard. I think the ability to say what Russia's doing is wrong as a country and then to respond to it, it's tricky when your economy is really tied to that ship, to Russia. So but I think the crude oil market, if we just talk about it in general, I think it should be about $100 a barrel. 195 to maybe 110, that kind of a range right now. I don't see a reason for people are saying $200 a barrel. I don't think we have the fundamental drivers to create that kind of environment for that marketplace. Something too, Mark, that I was just thinking about when I was mentioning that. But it's this micro WTI crude oil futures contract at the CME. What impresses me about that is, one, they've done over 10 million contracts since it started just a months ago. They're doing about 8,700,000 average daily open interest, which means, if you're not familiar with open interest, It's the number of contracts that are held overnight, which means people are paying margin on that. And it says something about commitment. People do not hold positions overnight if they don't have confidence in the market they're trading. And so obviously that's there. They're doing over 68,000 average daily volume, which is impressive. And here's the other thing that I find interesting. Over 37,000 are the number of unique users in this micro contract. And you mentioned micros, and I think it's been a far larger explosion than the CME ever contemplated. And what I think is happening there with these micro contracts, and especially crude, is that it's not, when we look at it, it's not volume that's coming from the mini contract, for example. We don't see that being scavenged for volume. That volume's still being maintained. So who is this new investor in crude oil or the currencies or indexes? This 37,000 we're talking about in the micro crude, I think it's that stock trader. It's the equity trader who says, I want to diversify my portfolio a little bit and I want to look something outside of the stock world. And, these futures are interesting. Maybe it's something I could take a look at. The power of these micro contracts is that your capital cost goes down dramatically. In other words, the amount of money it takes to hold a position is greatly reduced. So if it was $8,000 for a regular crude oil contract, it may be $800 for a micro. And that is the amount of money that will be allocated from your account to each position you hold in the futures market. That's the margin. And your exposure per tick is not $10 a cent, it's $1. So exposure goes down capital wise and as well as the capital requirements. So I find that fascinating. One more thought on this is that 36% of the volume in the micro crude comes from non US hours. That to me is powerful information because it means there's liquidity. It means there's participation, if I could just say it, around the clock. That means if I'm here near Chicago, so if I get in and need to get out at 1 a.m. or I want to get in at 5 a.m, there's volatility and there's also probably some volume there that I can use to get in and out. So it allows me to identify trades, manage trades, manage my risk almost around the clock. And if you're in other time zones, that's healthy for you as well. So I think this micro crude contract has really come into its own. And if someone's interested in trading the energy market directly, that may be something to consider. So the energy market, it is fascinating. It's the world's largest commodity market that's traded. So the upside, I think, could be there. But my feeling is a sideways market here makes sense. Now, we heard just a little while ago, Biden came out and said, you know something, we're going to open the spigot. We're going to go to our strategic reserves and now start releasing 1 million barrels per day for the next 6 months. Well, let's see. 6 months is 180 days. Is that right? Yeah, 180 days. That's 180 million barrels that would be taken out of our strategic reserves. Does that deplete it? Does it knock it out? Just so everybody knows, there's estimated right now about 568 million barrels of right now as of March 25th. So it would not deplete that. Does it have an impact? To some extent, it does. It does relieve some of the supply issues that we have in that marketplace. Is it a solution? No, it's not. And it is for 6 months. Uh, it's a really complicated marketplace when you think about this idea of producing it. If to look at it from the oil industry side, and one of the things Biden mentioned was, doggone it, get out there and produce. Well, if you're an oil company, do you want to spend billions of dollars to now start producing in areas that maybe you're not producing in now for an industry that may be changing as we go on into the future, that the administration says we want to get away from fossil fuel to do something else? Not saying that's a bad idea, but just strictly from an economic point of view, if you were the CEO and you do have a social obligation, but also an obligation to your shareholders, would that be a good investment? One of the things they talk about a lot of developed wells that are capped. Our inventory of those type of wells has gone down dramatically. And to produce new well, if you're looking at shale, that could be 6 months, 9 months to get that online. And then you have to be in an area that you can transport it. So is that production near a transportation hub so you can get it to the refiners? So all of that, it's not going to happen tomorrow. And by the time it does come online, will it be a solution? It's a fascinating market to me when we think about crude oil by itself.
Yeah, you mentioned, we are seeing some news right now. Of course, OPEC meeting today. Always a big driver of interest and action out there in the crude markets. It seems like they mostly kind of kept things along the lines, barely raising their output target to about 432,000 barrels per day starting May 1st. I think that's up from about 430. So nothing really big there. They did, on an interesting little side note, they did also decide to kick the IEA, which is, an outlet that we rely on for a lot of their data here in the U.S. Decided, I guess, that was too pro-Western, so they stopped relying on their data as a reliable data source anymore, which is kind of interesting. Maybe a little bit of thumbing their nose at the West. But Dan, outside of that, anything really surprising you from today's OPEC meeting, or is that pretty much along the lines of what you expected?
Right on what we expect. Not much change at all. What's their incentive? They control about 45% of the global supply. To give you a feel for how much crude oil do they control. But Saudi Arabia wants crude oil around $80 a barrel to balance their budget. So do they have strong incentives to really put a lot more production out there? Can they? Well, Saudi Arabia does have some room. They can produce more. It costs them about $2 a barrel to get it out of the ground. And they do have the ability to increase supply. Some of the countries don't. Some of the countries are near their maximum capability. But is supply potential out there? Yes. Does OPEC have a strong reason to do that? No. If you look at Russia, when crude oil was $70 a barrel, Russia made $120 billion at that price level. So you want to keep things copacetic? Sure. Let's leave it alone. For Ukraine, if you look at the nat gas, the fees on that pipeline that goes through Ukraine, they were paid $1 billion on the fee income from that pipeline. So keeping things running as they are, I think that's a step that we can expect to stay as it is. I don't see OPEC making changes. This whole supply situation is going to stay fluid. And I don't see anything on the offing that says that's going to change dramatically. God forbid if something happens to these pipelines. If you're Germany, 45% of their nat gas supply comes from Russia. So there's an economic side of it. And what really gets me, Mark, is when last week when Putin said, okay, here's the deal. we don't want any more U.S. dollars because all this energy markets are traded in U.S. dollars. And he says, we don't want any more U.S. dollars. Doggone it. We're going to take rubles. We'll take gold. We don't want euros and we don't want U.S. dollars. And he said to the central bank, change it. You got a week. Get it done. Said to Gazprom, which is their large nat gas supplier, get it done. You got a week. Okay, well, let's think about that. You have all these contracts out there for delivery of these energy products that are in play. All right, that means those contracts are in dollars. So now you got to open negotiations. You're going to have to change the terms and conditions. The terms and conditions may not be favorable to Russia. And it takes time to do that. The ability to get it done in a week, I don't think so. And what's interesting is we're seeing news now where Russia's kind of backing off from that a bit because of the reality of what's happened with it in terms of really making that happen. And, I get Russia saying they don't want dollars because look at how the United States and the rest of the world has been able to tighten their access to the financial marketplace, which is the other issue. And then some countries talk about using a crypto. Well, you can create a crypto, but does it mean other countries are going to trade it? Venezuela did that. They created a crypto. And the first thing Trump said was nobody can trade it. So that's the other issue that's kind of floating out there. Maybe it should be a crypto alternative. I really don't see that happening either.
Let's see what's happening out there from an overall crude oil options perspective. As you said, it's an OPEC meeting week, so that tends to drive some paper. And we are seeing a little bit more paper on the tape this week. About 510,000 contracts on the tape right now. Usually around this time, it's about 400,000. So you're talking roughly 25% more. So a nice little pop. Or also, we're not at the 1 million plus level that we saw not too long ago when things really got topsy-turvy out there in WTI. Coming into the start of the show, we had crude oil right around the $100 a barrel level, about 100 and a quarter. That puts it off over 13 handles, about 13 and 2/3 handles from where it was just since the start of the week. That's actually almost exactly 12% from where it was to start the week. So crude coming down a wee bit this week, heading into the announcement, of course, from Biden, as well as maybe some anticipation of what OPEC was going to do. In terms of action right now, I said about 500,000 contracts on the tape. 38% of that is in the May contract that goes away in about 14 days. So right at our cutoff, listeners. If you're wondering what is the vol right now in WTI, it has come off quite a bit. It is down to about a 62. It's still frothy. It's still nearly double what it has been in quiet periods in the past, but it's off still about 16 points from where it was this time last week. In terms of skew, last week it was about 1.6% discount to the puts. This week, that discount has increased. It is 5.6%. So you could get those puts for roughly almost 6% discount to where the at-the-money vol is trading right now. On the flip side, if you wanted to buy some calls, listeners, those had about a 4% premium last week. This week, 6.3%. So we are seeing some evolution to that skew, even as crude continues to whip around here, listeners. And in terms of where the action was this week, I think a lot of you could probably guess that since we are floating around the par strike, the 100 strike, that's pretty much where we're going to see a lot of the action centered. And that was the case. The most active contract this week was the May par puts with about 11,000 and change going up this week. Kind of active all week long. Today, about 3,700. Tuesday, 3,500. Monday, 2,600. 1,300 on Wednesday. Mostly opening throughout the week. So a lot of action as we kind of flirted with and retreated away from the par strike out there. Right behind that, we have the 95 puts with about 9,600 contracts. Again, the big day for those actually today, 3,380. So again, you expect an OPEC meeting day to be a pretty heavy paper day. That's pretty much what we're seeing. The rest of the week, 2,600 on Tuesday, 2,000 on Monday, 1,500 on Wednesday. Let's look a little bit farther afield. You know what? It wasn't all puts all the time, though. There were some calls, in particular the 120s. It seems outlandish, but we weren't that far away from it not too long ago in WTI. So the 120 calls in May as well doing about 9,400 contracts this week. The big day again today, 3,400. Although Monday they did 3,300, so decent amount of paper on Monday, 2,000 on Tuesday, not too much going up on Wednesday. Seems like a lot of closing paper throughout the week. So folks dialing back their 120 call positions here this week as the OPEC meeting approach, which probably makes some sense given what we're seeing playing out in the market right now. Let's look really quickly, see if you see any other outlandish paper dominating the tape. 150 calls going up in August. Yes, 150 calls, listeners, traded almost 5,000 times this week. So that's nothing to sneeze at. Most of that was on Monday, 3,100 on Monday. And so it looks like, and maybe might be a bit of a vertical. 160s also traded similar size. So 2,500 of the 160s, 150s, 3,200. Both of those were closing. So maybe a bit of a funky vertical out there still. 150s. That certainly gets the attention. Usually you see that in December, but not even in December this time. It was in August. And let's see. Other stuff lighting it up out here as well. I see we got some questions. We'll get to those in a second. First, let's keep on rolling here. Let's see. Mr. Dan, I will allow you to choose, sir. We are in energy, so we can hang out and do nat gas. It was our, let's see, number 2 mover to the upside this week, or we could keep on rolling. We did a poll right before showtime, and we asked our listeners what they wanted us to talk about, gave them 3 choices here. We gave you crude oil, Bitcoin, and Eurodollars. Over half of them, 55%, chose crude oil, and Eurodollars coming in with a third. So you want to do nat gas first, then jump to Eurodollars, or go straight to Eurodollars, sir?
Let's do nat gas. That's also a market that's really fascinating. 45% of Germany's supply of nat gas comes from Russia, as I mentioned. The other countries that supply Europe, because we think nat gas right now, when we focus on Europe, is Norway and the Netherlands. Norway, for example, they don't use much nat gas. Nat gas is used in 3 areas. In our country, it's broken out in about thirds. We use a third of it to heat our homes and cook our food, except the northeast part of the United States also uses heating oil to heat some homes there. We use a third of it for industrial use, the steel industry, the chemical industry, and those are big users also in Germany. And then we use a third of it to generate electricity. So that has a big impact on that. And what we were paying $5 before Russia invaded Ukraine, they were paying $25 for it. Japan was $28. So it was very expensive there for those products. And what's interesting about it is if you look at Norway, I said they don't use much because 92% of their electricity is hydroelectric. So they don't need it as much. And that's one of the reasons why they also send so much of it to Europe. They also laid a line to UK to help supply electricity there. I know people in the UK have been talking to me about their electric bills have just been astronomical increases. So natural gas is a very unique product. Not only does it have these general categories that I just mentioned, but it's also a big part of the agricultural industry. We need it to help create fertilizers. And that's really one of the areas we're faced with some serious problems, and that is, Ukraine and Russia when it comes to fertilizers and the ingredients and the ability to plant crops. That's another whole area that really is at risk when it comes to this Russia-Ukraine situation. Just a side note, since we're talking about oil, let's talk about an oil that's sunflower oil. 75% of the global supply of sunflower oil comes from Russia and Ukraine. And that is a crop that's planted in the spring, getting up to not too far from now. So who's going to plant it? Are they going to be able to plant it? Who's going to harvest it? Can they harvest it? How's it going to be transported? So that marketplace, and the reason I mention it is it bleeds over to other oil contracts like soybean oil or in palm oil. CME has contracts on both. We're seeing those markets respond to it. So nat gas is really a multifaceted product. And I don't see that situation being rectified. What President Biden talked about today is not a relief valve for nat gas. The other issue with it is our ability to transport it. And that's one of the challenges when it comes to natural gas. Like people say, well, doggone it, we have a lot of natural gas here. Let's just send it over to Europe or to Germany. Well, Germany doesn't have any import facilities right now. They don't have terminals for importing natural gas or LNG, which is liquefied natural gas. They just put it under a lot of pressure and lower temperatures, and you take a gas and you turn it into a liquid. But there are other terminals now being built and being looked at in Europe. Poland has import facilities. In the United States, we have a number of export facilities that are being built, primarily in the Gulf, Louisiana and Texas area, which is near our refineries. But it takes a while to get those off the ground. The capacity there has been increasing, but right now we're near capacity. So as much as we want to send, and almost all of our nat gas, that's what's interesting, has been shifted to Europe. It was going to Asia. We were sending more to Asia than we were to Europe before this Ukrainian situation. And that's shifted. We're sending about as much as we can to Europe, although it's not enough to solve the problems there. So nat gas is really a tricky market, and it's hard for me to imagine that we're done to the upside. Crude oil, I think this price area we talked about, I think kind of makes sense. Nat gas, on the other hand, it's a different animal, and there more movement to the upside could easily happen, especially if the temperatures in Europe change or they have some other issues in that regard. Where they need to use it. They've all in the UK and other countries, they've said, look, try not to use as much. Please cut back because there is this sensitivity to the supply for that. So Russia's tried to play the political game. It doesn't seem to be working because there are some other alternatives. Countries have said, Germany has said, we want to get 2/3 of our dependence on Russia. We want it done by the end of the year. And they want another, the last bit, done in the next couple years. So we're seeing that global economic change that'll be interesting to see over the next few years, actually. So natural gas is really a critical element in this whole geopolitical environment that we're in right now.
Let's take a look at how that environment is impacting the markets and the prices out here coming into showtime. Like we said, we had nat gas, our number 2 overall mover to the upside from last week, up 6.17%. As of the start of this week, it's kind of unched, up 0.45%. So a lot of that move obviously came post our last show before the beginning of this week. In terms of action, nat gas is actually outpacing WTI today, 571,000 contracts on the tape. That is nothing to sneeze at for WTI. And in terms of the action, it does seem like they're going a little bit farther out here in natural gas. It's the August expiration doing almost a quarter of that volume. That has about 117 days to go. So it's a refreshingly long term to analyze here, as opposed to some of the other products we talk about that seem to have a day or two to go sometimes. In terms of the vol right now in nat gas at about a 55.5, that's down almost 6 points, about 5.8 points from where it was this time last week. In terms of skew, a little bit of an evolution out there, particularly on the call side. The puts are fairly equidistant to where they were this time last week. There was a 7.1% discount to the puts last week, so 7.1% discount. Last week, 7.8% discount. This week, so a little bit of a steeper discount. In terms of the calls, that bid has decreased a bit, 9.2% rich last week, 5.9% rich this week, which is interesting given Dan's comments how he thinks there could be more upside ahead. So maybe intriguing levels there on that skew. In terms of the action, the most active contract out here was the Dan, this gets back to what you're just talking about with the upside. The 10 even calls in August. My goodness, the 10 calls doing 62,391 contracts. My goodness. Also followed by the 10 half calls doing pretty much the exact same amount. So someone did the 10 half vertical 62,382 times today. That all went up today. That's why we're seeing so much paper in WTI. What do you think about that one, Dan? The August 10 half call spread. They love their very tight call spreads in nat gas, don't you think?
Yeah, I do. That is very tight. And it does say something about their outlook of what they think may be happening. It is a tricky situation, and who knows what's going to happen here. But that one is really very aggressive, far more than I would expect to hear with those numbers, strikes as well as volume. So it does say something about that longer term attitude that people have regarding this marketplace.
Yeah, those are E-mini downside put numbers, 60,000 at a clip. That's a lot of paper. So that shows why nat gas is tearing it up this week, listeners. And speaking of tearing it up, you guys are tearing it up in our poll. Number 2 out there. I know a lot of rates heads out there. So number 2 behind crude oil is the Eurodollars. So let's head on out to rates next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, get into that drop down, pop it out of energy. You're going to scroll down about 3 more classes till you get to interest rates, move on over to U.S. rates and pop it into the Eurodollars there at the top. That'll be enough to take you for a while. There's a lot of paper in Eurodollars, 3.8 million contracts on the tape right now. Dan, you and I haven't chatted since the Fed did their little dance a few weeks ago, then decided to come out, about a week later and say, yeah, what we talked about last week, let's just double that. So what are your thoughts on what we've been hearing from the Fed and what we're seeing out here in Eurodollars and other rates products, sir?
Well, one, it's a tough job, but they're on a wild bronking horse right now. It's a tough one. So how do they control inflation? And what is the right way to kind of slow it down? And, today we had the PCE, the personal consumption expenditure, which is something they look at for inflation, increased 6.4% year over year. And that's our steepest increase since 1982. So now, do they have the numbers to justify going to 50 basis points? If we look at their interest rate management on the short end of the curve over the last 30 years, the vast majority have been 25 basis points. But if I think it was in 2007, we saw not only 50 basis point increases, but 75 basis point increases. And I think that's the highest number we've seen in the last 30 years. It's tough because when the Fed does that, the things that you and I look at, Mark, responds instantly. Even when people are thinking what the Fed may do, the market starts to respond to it. And the day that they make an announcement, every word is parsed, and the market again instantly responds to it. But what concerns me, and we've seen it in the past, late 90s, we saw it in 2003 to 2006, when the Fed becomes too aggressive, our economy doesn't feel it that way. It doesn't feel it instantly. It takes 6 months, and some people say 18 months, for our economy to feel it. So if you're changing interest rates every time you meet, that creates, I think of it as like a tidal wave of economic change that ends up being filtered into our economy. And that's where we start seeing things slowing down. If we look at, remember the dot-com bubble in the late 90s at, I think it was 6.5%, credit choked off, and that market fell out of bed through 2003. And they lowered it to 1% at that point. And then they started to creep it back up again. Why? Because they're concerned about inflation. Why are they concerned about inflation? That's their job. They have to be concerned about inflation, full unemployment, price stability. Those are the three things the Fed job. That's their mandates that they're supposed to be doing. We also know as inflation increases and it costs more, that means I have less disposable income and I can't buy other stuff, which means our GDP, which is based on 70% of consumer spending, can get hurt. So our overall growth is impacted and things can slow down. So inflation is one of those evils that you do want to keep in check, no doubt about it. And we're a long ways away from 2%. My only concern is they do too much too fast. And then we feel it, 6 months, 9 months, 10 months from now.
Interesting. A lot of people thought the Fed was going so slow. You're worried the opposite. You're worried that they step on the accelerator too much and they burn us all out, Dan.
Correct. You're right, Mark. I mean, I can say that, but then if you're on the Fed, what do you do? So if you say 50 basis points, it's all right. So what does that mean to us? Well, I guess our economy is strong enough. The Fed thinks we can handle it. Okay. Or is the Fed concerned about something I'm not concerned about? Is there something else going on that they now need to increase it to 50 basis points? So it can be read two different ways. And it can be read from the point of view could damage our economy to it needs to be done because inflation is increasing at such a fast rate. So it's really complicated. And all this is also, and the impact of it is from Ukraine-Russia situation. What do we do about that? How does that impact on this? What about if virus pushes its head back up again? And we have another issue with that. What's that going to do to inflation? Before we had such a flat line when it came to inflation, and we're just not experiencing that now. And it seems that when we had the supply issues, the supply chain issues, it really added the fuel to the fire, I think, when it comes to inflation.
Let's see what fuel there is on the fire of Eurodollars this week. 3.8 million contracts on the tape, so that's nothing to sneeze at out there in Eurodollars land, listeners. And of that, about 22% coming in that front Dees contract that has, a whopping 262 days to go out there. So we'll hang our hat out there right now, about 97 and 5/16. Haven't said that in a long time out there in the Eurodollar. I love that they still quote steets and eights out there. In terms of your vol, people think rates have no vol, but Eurodollars begs to differ. 131.83 in that Dees contract. Listeners, that is like, that's beyond a Tesla level of vol. It's beyond Bitcoin. Bitcoin's only hovering in the mid to low 60s. That's pretty much double Bitcoin. So that's a lot of juice to be found in the Eurodollar. So we're not talking sleepy 10-year, 6, 8, 9 vol, 4 vol listeners. This is Eurodollar is a very different beast. In terms of skew, last week the puts 3.1% rich. This week 1.1, so coming in exactly 2 points. The calls last week 1.5% cheap. Last week 1% rich. This week, so a little bit of skew evolution, but not a ton. That's interesting given how much vol is going on out there. And in terms of action, Eurodollars delivers on the overall paper front. It was the 97 even puts, so pretty much the at the money put, pretty close to it right now, doing 80,600 contracts this week. That's just one option in Eurodollars, doing more than a lot of complexes we could talk about right now, listeners. Pretty much all of that was Monday. 54,000 of that on Monday, 22,000 on Tuesday, 4,000 yesterday. I love Eurodollars. They could turn it on and they could turn it off on a dime. 0 today. Not even one of these traded today, but we had 54,000 going up on Monday. What a product. That's followed hot on its heels for number 2 by the 96 half puts. Probably some vertical put action going on there throughout the week. Total, I said, about 58,600 of those. The big day for those was Tuesday, about 31,000 going up on Tuesday. And then behind that, we have the 97 half put. So pretty much a put strip, 97, 96 half, and 97 half. pretty much in that order, listeners. 54,500 of those. The big day for those, also Tuesday, 20,000, 13, almost 14,000 on Wednesday, 18,000 on Monday. So mostly opening in the latter portion of the week. Actually, I take it back. They did 2,005 today. So unlike the rest of those puts, they actually traded a little bit today. The rest of them wanted nothing to do with today. Not a single contract, which is always fascinating to me. Let's just scroll really quickly to see if there's any other paper here. There's a tsunami of paper, listeners, and we're kind of coming up against. I want to get some other products in. I want to get you folks in too. So let's dive really quickly out there into the equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, welcome to the equities pop out of the rates, pop right into the U.S. equity indexes. We're going to stop in Russell 2000 first, but you can stop wherever you like, listeners. Before we get into that, let's break it down from a vol perspective. A little bit less vol, but only slightly, really. RBX actually pretty much unched. It was around 27 and a quarter on our last show last week, 27 and a quarter about this week. So pretty much unched. RBX, of course, the VIX of the Russell 2000. VIX just a little bit shy of the 20 handle now. So ticking back up on today's sell-off. It was decently shy of the 20 handle not too long ago. 1991 when we kicked off the show. That still puts it down almost 2.5 points from this time last week. So that VIX to RBX spread obviously going to widen out a little bit this week. A VVIX at about a 110. That puts it up 3.25 points. Vol Q, the at-the-money vol of the NASDAQ 100 at about 2364 when we kicked off the show. That's down about 1.15 points. So we saw that VIX to RBX spread. So the large cap to small cap spread getting extremely wide, 7.25 points. That's pretty much 2.5 points wider. That's pretty much exactly the move that we saw in VIX this week. Wow, that's a chasm between large caps and small caps. You may want to look into that one, listeners. And then VIX to Vol Q, about 3.75. That's about 1.3 points wider than this time last week. Mr. Dan, anything catching your eye in the topsy-turvy world of equities right now, sir?
Well, I think the Russell is an interesting market, and I think it's approaching levels around 2080 or so where you could get a bounce at that level. That's what you want to see. 2 days ago, we had what I call a benchmark candle. That was a big push that we had to the upside. The way we've come back implies that big move to the upside is still dominant. So I think the bias is for a move to the upside. I feel the same way about these other indices. They are softer right now across the board, but I think the long-term bias is still for a move to the upside. It also goes back to perception. What is the market thinking about what the Fed may do or not do with these numbers that have come out? But, not all numbers are bad. We also had unemployment claims that increased 14,000. That was a little more than expected. U.S. personal spending, though, was up 0.2%, less than expected, but it still means people have money and they're willing to spend it. And that fuels our marketplaces we talked about, and it fuels these stocks that we're looking at. We want to remember, too, that our friends at the S&P 500, 45% of their revenue comes from outside our country. So the geopolitical environment for these markets are also important as well, too. But right now, I still look for movement to the upside unless we get something new, news-wise, to create that downside movement. And bears could tip it over, no question about that. Virus, Ukraine, Russia, those things are still percolating out there. So who knows how that's going to settle out. And I think that's the cloud that's hanging over these markets. But I think our economy, I think the earnings that we've seen from many of the companies the last go around are still providing that foundation for upward movement.
Let's see what kind of movement we're seeing in the Russell 2000 before we get to some of your questions here. And looks like most equities, we're seeing about 25% of the nearly 30,000 contracts going away in pretty much any minute now. So of that, the 2080 puts, which are pretty much exactly at the money, we're at 2079.60. That's kind of leading the dance out there. If we get a little bit farther out, the more active contract right now with about 12.3% of the overall paper, but the number one hot contract right now are actually the 1640 puts. I said we're at about a 2080 right now. So 1640. We've talked about these before. Every once in a while, these pop up. These pretty far out of the money puts. These are in the week 3 May contract, listeners. And these are pretty active again today, doing over 600. Again, doesn't sound like a lot, but that's more than the entirety of like the big crypto options do in a week. So, and looks like, yeah, they were all opening on Monday. So someone opening on the 1640s. In the past, I think we have seen rolls to those. It looks like this is just straight up opening of these 1640s, doing quite a bit of paper out here this week. And again, all on Monday, which is interesting. Again, such a strange strike so far out of the money, 440 handles. But again, we see strange stuff like that in the E-mini S&P as well. But those are usually much nearer dated and usually selling. So they're selling 800 handle out of the money puts that go away in a couple of days. These are a little bit farther out and have a little bit more meat on them. Speaking of meat on the bone, your questions always have meat on the bone. So let's get to some of those right now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to the Futures Options Feedback. We got a lot of questions for you, Dan. Not much time to get to them. And of course, we got to bump our secret club folks to the top of the list. If you guys want to get in on that, of course, where to go, theoptionsinsider.com/secret club. You guys are always first in the question queue, including this one here from Mr. Unlimited. He says, Dan, what are your thoughts on the Saudis accepting of the yuan for oil? This was big news a few weeks back. It seemed like Saudi Arabia maybe making a little bit nicer with China, kind of thumbing their nose at us. What are your thoughts on this, Dan? Do you think it has any lasting ramifications for the oil market?
Well, it's not the first time. We want to remember that even though crude oil is traded in dollars, Japan has paid for crude oil in non-U.S. dollars. So this idea of the yuan being used, China wants to get away from the U.S. dollar if it can as well. So you have two countries that are highly motivated to get away from U.S. dollars or the euro. And U.S. dollars still maintains about 80% of all currency transactions. So not surprising at all. And would they do it? Yes. Have they already agreed to, even prior to the, I think it was during the Olympics, but they agreed to having a new pipeline from Russia to China? China's the backdrop when it comes to Russia. If Russia sees Europe being shut down, which it looks like it could be, they need another trading partner to replace it. China has the demand that could help support that. So, no, not surprised. Look at India. India in the past has also paid for crude in other currencies. I wouldn't be surprised if they do that. Look at rubles or something else that they would be willing to pay in. So, no, it doesn't surprise me. And I would expect to see more of that as countries try to get away from that U.S. dollar.
All right, we got time. We'll squeeze in one more. I'm nice. Let's go to Vincente because they were waiting for you, Dan. Vincente said, what is Dan's favorite product or complex to watch or trade right now? So, Dan, I know you cover them all. What would you say is your favorite?
Favorite? Wow. I don't know. They all have their own little story. The indices are interesting. Currencies, I find fascinating. The euro is really incredibly interesting today. The commodity currencies like the Aussie dollar and Canadian dollar, I think, have interesting things going on. And the rates, 10-year notes, 30-year bonds, looks like they're trying to move a little bit to the upside on price. So I find that interesting. And the metals, gold has trouble following through. So it's a struggling market. I think silver's in the same boat. It doesn't know what to do. Copper right now is soft. It's backing off, but long term, I'm bullish on that marketplace, on that market because of where it fits into the big picture. Crude oil, what can you say? That's such a fascinating market. It's got the volatility, it's got the liquidity. The options are terrific on that one as well. So and same thing for nat gas. They both have some interest. Something we haven't talked about. I'm not suggesting anyone trades it, but I mentioned to you about sunflower oil. Well, the bean oil and the crude palm oil contracts have really taken off. So if you want to look at something that's kind of interesting to see that it is part of that whole complex, you may want to take a peek at it. I'm not so sure about trading palm oil in terms of liquidity, but it's another interesting facet of this whole geopolitical thing that we have going on out there. So, Mark, sorry, Vince, I really have a hard time picking a favorite because they all have such unique stories.
Spoiler alert, Dan likes them all. I could have told you that.
It's not the right answer.
Well, you'll have some time to mull it over before your next appearance. Or maybe you have some esoteric suggestions in there. But I had a feeling you were going to choose all of the above. They're like your children at the end of the day, Dan. You can't choose between them.
You know something? They are. They all have a little story. They're all my friends. Some of them are a little schizophrenic, but that's okay. It's the challenge of looking at these markets and trying to make some kind of informed decision.
Well, Mr. Dan, if folks out there want to join you in looking at and listening to some of your commentary on these markets, where should they go? What should they do, sir?
Well, they could go to dangramza.com. There's a free video. I do it every day. It looks at 22 different markets, and I pull out some different ones. You'll see red and green lines on those videos that I create on those charts. Those are buy and sell levels. These are not buy and sell recommendations, but I'm just trying to share how I look at and analyze these markets. And to give you an idea of how they unfold, and you'll see those lines changing over time. You can go back a few years and look at past videos to see what was I saying when that thing happened. Well, you can go back and look at those markets and see what they were showing. So if you're interested in futures and you haven't traded them, a place to start is just to watch them. Or if you only trade stock indices, you may want to look at some other complexes that may provide you with an opportunity. So that's the intent behind it. So if you have a chance and you want to look at those kind of markets, that may be something to check out.
There you go. Dan Gramza, Gramza.com, the place to go. You know where to go to check out all of the latest on their futures, options, reports, and everything else they have going on, education, so much more. CMEGroup.com. Start your journey at /TWIFO. Then you can move on from there to wherever your heart may desire. Then, of course, if you want to learn more about all things small cap, RBX, RUT, what's going on with the COVID impact. Does Recon impact that crazy June 8th date? We've seen that has been the apex for many of those mid-sized and smaller equity names. Head on over there at FTSE Russell on Twitter, or of course, FTSE Russell, FTSERussell.com are the two places you can go to get that info outside of when we're doing shows like this. That's going to do it for us today here on the network. We'll be back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Should be fun. A lot of vol to unfold and unpack out there. And then, of course, for all you cool kids in the Secret Club, we're back after that, 2 p.m. Central, 3 p.m. Eastern for Options Oddities. And then we'll be back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.